Here's another object from the museum's collection, and again, I won't read the whole definition, but it's a wonderful illustration of where the word indenture comes from. And this is something that a lot of bond investors tend to forget, particularly in frothy periods like 2005, 6, and 7. A bond with a good indenture is a bond whose documents, whose disclosures and documents meant to protect investors have teeth. Because that's literally what the word indenture means. And in early days, in medieval times and up until the late 18th century, they typically were shaped like teeth, but they became progressively softer and wavier as time passed. And this is from 1778. I'm going to call it an obligation rather than a bond. It's a debt of the Massachusetts Bay Colony during the Revolutionary War, and already the indentures are kind of soft. And by the 19th century, most indentures had disappeared. They were still words on a page, but the idea of them having teeth was gone. And in the old days, the purpose of that was authentication. The teeth on duplicate copies of the document had to match perfectly. And if they didn't, then something had been forged. So it was an early form of two-factor authentication. This is my favorite definition in the book, and it's much too long to read. But as I worked on the book, I became increasingly fascinated by the fact that in ancient Roman literature, in the Latin, the word fortune means both wealth and luck. And the two meanings are really inextricable. And when you study the history of the images, you encounter these wheels of fortune. And anybody who's ever had the misfortune of watching Wheel of Fortune on television at 7:30 sees the contestants spinning that thing. And this is an ancient tradition that goes back well over 1,000 years in Christian Europe, and probably farther back than that. This is the goddess Fortuna, and typically she's shown blind or blindfolded, standing on a bubble or a wheel to symbolize the fact that her own purchase on solid ground is shaky. And she's spinning the wheel, and these figures are all kings. This one says, I believe, if I can read it right, regno, I reign. This one says, regnavi, I did reign. I can't quite read it, but this one is saying, I have reigned. And this one is saying, I will reign. And there are cartoon-like versions of this in which we see frame after frame. And it's very clear that she just keeps spinning the wheel, and the same king just keeps going up and down to symbolize how ephemeral wealth and luck can be. And I think that's a very powerful lesson, not just for investors, but really for about human nature in general. This definition is near and dear to my heart as an employee of the Wall Street Journal, and I'll just read a bit of it. News, noun, noise, the sound of chaos, the reason the prices of investments move, the lifeblood of traders, often the bane of investors. It is no accident that newspapers were first widely read in the coffee shops of Amsterdam and London, where crowds of over-caffeinated brokers waited to pounce on the news about and brought by the latest ship to arrive in the harbor. In a series of brilliant experiments conducted in the 1980s, the psychologist Paul Andreasen found that investors who received frequent news updates on the companies in their portfolios traded roughly 20% more often and earned less than half as much, on average, as investors who didn't follow the news. keeping current on what is happening in the financial markets is not the same as knowing what will happen, as this classic front page reminds us. And this is from the museum's collection. Thank you, Kristen. And it was published on October 25th, 1929, the day after Black Thursday. The stock market had just crashed, but according to this newspaper, which is no longer published, the stock market crisis was over. I think my math is right. These people were right, but they were right too soon. I believe the stock market went down about another 80% after the crisis was over. Here's a definition for panic, and this is another definition rooted in mythology. Here's a figure of Pan, the part goat, part human god from Greek and Roman mythology. And then Kristen and I both think this is also from the museum's collection, although this particular version I obtained from the Library of Congress, but we think it's here somewhere. We just couldn't find it in time. And this is wonderful because if you look, you can really see it's the same figure. He's got the goatskin boots. He's got the goatskin leggings. He's a hairy, ugly man with frizzy hair, and he's sweeping the garbage out of Wall Street. This is immediately after the Panic of 1873. And the cartoonist is conveying the idea that panic is sort of the natural hygiene of the financial markets. After a boom, you need panic to come in and clear out all, as many people would put it, the weak hands. You take people who don't really mean that they're long-term investors, and you just sweep them away. So here's a definition that I do like, and I'll read it. And it goes with this image, which shows this wealthy woman sort of counting her baubles. This is from around 1610. And bubbles are drifting up from her table and slowly drifting away. And the definition goes: risk, noun, the chance that you don't know what you are doing when you think you do. The prerequisite for losing more money in a shorter period of time than you could ever have imagined possible. Risk can be formally defined as the odds of an adverse or undesirable outcome. When the forecast is for an 80% chance of sunshine, for example, then the risk of rain is 20%. Or as the extent to which extreme outcomes differ from the average. It has been philosophically defined by finance professor Elroy Dimson of London Business School this way: risk means more things can happen than will happen. In the end, risk is the gap between what investors think they know and what they end up learning about their investments, about the financial markets, and about themselves. Here's a definition I really like. Stock, noun, the right to own a fraction of a business, regarded by most investors as the right to play a video game. Here's ticker. And this one also is illustrated with a wonderful image from the museum's collection. This, we don't know exactly when this is from, I don't think, Kristen, but my guess is it's from around the turn of the century, the late 1890s, the beginning of the first decade of the 20th century. And the caption is, "Loves me not." So he's sitting by his stock ticker and he's plucking away the companies that have made him money and separating them from the ones he's lost money on. And so ticker, noun. In the real world, slang for heart. On Wall Street, the machine that conveys a ceaseless stream of changing prices, the lifeblood of brokerage firms. Invented in 1867 by E.A. Callahan and refined in the following years by a young telegraph operator named Thomas Alva Edison, the ticker was a telegraph that printed the names and trading prices of stocks onto paper tape at high speed, ticking loudly as it went. Today it is computerized, flashing silently in red and green, although big moves on an electronic ticker can still produce noise when those who see it scream in joy or pain. And then there's an associated definition, ticker symbol, noun, a sequence of 1 to 5 letters representing a particular stock. The only thing that many people who call themselves investors know about a company. I just bought QHKR, said Howie Babel, a local chiropractor, to his friend Sherwood Billett, an accountant, at a recent backyard barbecue in Kokomo, Indiana. Is that a biotech company? Asked Mr. Billett. I don't know, answered Mr. Babel, but it's going up. Who cares? Here's another example from the museum's collection of a very early ticker. So I'll finish up here so we can take some questions. And here are 2 quotes from Charlie Munger and Warren Buffett, whom I think we can all agree on as being among the best investors alive. And both of them really cling to this idea of the importance of trying to prove that what you believe is wrong before you act on the confidence that it's right. And I guess the 4th goal I have for this book, beyond entertaining people, educating them, returning them, or introducing them to Bierce, is I hope it will also help them test their own assumptions. I think that can make you a better investor. It can make you a better informed participant in the financial markets. So with that, I'd love to take some questions, and maybe I'll answer some of them with definitions from the book or just with anything.